Good day and welcome to another broadcast of Venture Capital Fund. In the event that you're joining me for the first time, this is a program that has been designed for the private sector. In this program, we look at a range of issues relating to small, medium, and large scale businesses. And we look at also a number of issues relating to financial intelligence that really puts businesses in the position of strength to be more financial savvy. And so it's really a joy to be the host for Venture Capital Fund. Over the last few days, we have started a series of programs that we call Business Startup and Investment Capital. Yesterday, we started to look at business startup and financial sources, and we looked at the commercial financial sector. And we looked at a number of important issues that is important for you to understand when you are trying to access funding from the commercial financial sector. So some of those things that we looked at is we look at your balance sheet. You need to have a positive bank balance. We look at cash flow. It's important for you to have a positive cash flow. We look at credit score. We talk about the importance of your credit score. And we also look at two other issues, and we say that age do matter. We give an explanation as to why age matter when it comes to accessing funding from the commercial financial sector. And we definitely said that having collateral would not hurt in the event that you want to beef up confidence, trust, and credibility in the minds of your potential investors. So we look at those issues, and today we're going to be looking at another financial source, which is the investment financial sector. And you need to know more about the investment financial sector because depending on where you are in the world, we find that many business startups, when you have failed to reach the pre-qualification criteria has set out by the commercial financial sector, you tend to give up. So in this series, we call Business Startup Solutions. You will learn about the commercial financial sector, you will learn about the investment financial sector, and you will learn about smart capital market. Today, we will dig in a little deeper into what is the investment financial sector. But just before we get started today, do permit me to introduce myself. My name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the multiple best-selling author for several books, including Billionaire Codes and Manager's Toolkits. These two books are already bestsellers, and if you go to my website, or a sister company website, www.megamoneygy.com, and you navigate the front page, you will see this book there. You can also make a purchase from that website to really get the information that are in this book. Along with this, I want to say that if you're looking at this program for the first time, or you have been looking at this program but never liked or subscribed, I want to encourage you to just give us a thumbs up, and there's a subscription button just below this screen, and you can give us a subscription, and you can press the bell so you will be the first to get these information on a daily basis that we are bringing to you. This program certainly comes to you with the compliments of Venture Capital Fund, Venture Capital Inc., and Global Branding and Marketing. So welcome once again as we look at business startup and funding sources. And yesterday, if you missed out on yesterday's program, I want to encourage you to look back at Business Startup Solutions number 2, and you will get all of those information that we would have, number 3 in fact, that we looked at yesterday. So today we want to look at investment financial sector. Now, what exactly do I mean when I talk about the investment financial sector? As a business startup, you need to know this. Why? Because when you go to the commercial financial sector, you're saddled with interest and dividend. I'm not saying that it's good or bad. That is highly subjective, and later on we'll do that analysis. And if you look back at the program, we do a little bit of that. But the difference between paying interest and the principal balance with the investment financial sector, you're neither paying interest nor dividends, nor principal, you're paying dividends on the amount that you're able to raise from the market. Now, that sum that you're paying out back in dividends is not necessarily paid out on a monthly, quarterly basis. It's paid at the end of the year based on the profitability of the organization. So we'll probably look at some of that today so you get a better idea about that. But you have a business startup, you have a great idea, and you now want to access capital in the interest of elevating your business idea, your brand off the ground and getting it into the hearts, minds, and soul of the general public. You may not have succeeded with a commercial bank, so you are now attempting to interface with the investment financial sector. Now, there's a number of portfolios in the investment financial sector. One of the first platform for you to know is what we call the IPO. And what is the IPO? An IPO is an initial public offer. And the initial public offer is when you're taking a company for the first time and you're positioning that company, that business, to go public. We call it an initial public offer. So this is one thing that you need to spend some time really digging into and understanding. Later on, I'm going to take each of one of these and I'm going to dissect it and blow them up for you so you have a really in-depth understanding of the subject matter. The other area that you can raise funding is what you call seed money or angel capital. Now, seed money or angel capital is another venture capital fund where you find there are persons out there, there are businesses out there, either private or public businesses out there, that may invest a small amount in your business startup to get your business off the ground. And there are many of these type of investors, either accredited investors who may be willing to invest in you based on your portfolio, and it's important for you to know this. Now, these type of investors are more prevalent in the developed world. In developing economies, we need to have more of these types of financial markets that can really help to give business startup and businesses generally a fighting chance to access capital and a fighting chance to be able to scale their business, their brand, their ideas with local, regional, and international relevance. You also have the venture capitalists and the venture capital fund. And these guys tend to give a little bit more on the investment capital. So you come to your IPO, you did well in scaling your business, you now come to the angel investor to get some more fund to further scale your operation. You now come to the venture capitalist with additional funds to help to diversify and scale your business. All the names I'm calling are people, financial market, private financial investors who may allocate huge sums of monies to you in an effort to help you to scale your business. But in doing this, it's important for you to also recognize that they may take a share in your operation. We'll talk some more about this just now. Along with this, you have what we call the growth capital. The growth capitalist, he is looking for businesses that would have had a track record, businesses that are somewhat integrated into the market, and businesses that now want to scale. And the growth capitalist comes in and say, okay, we can give you the additional funds to scale your operation. In terms of the IPO, this is literally business startup. You may have zero track record in terms of how you do your business. In terms of angel investors and seed capital, they also may not be looking for experience and track record in business, though it will help if you have these things. It's more easier for you to persuade these individuals to come on board with you. I will also talk about things that you can actually do and should do when you're trying to make a pitch to the venture capital market. The last one that we're going to look at here today is what we call the LBO. The LBO is normally called the leverage buyout. Now, what exactly is a leverage buyout? There are many companies across the world. What they're able to do is to develop a business idea, develop a business, and scale that business idea and that business. And as they scale it, they're able to now attract investors. Now, what happens very often, if your brand is relevant to persons in the market, and your brand can further help people to scale their operation, they may make you an offer that you can't resist. This is one way in how you get an LBO happening. They see your business as potential, and they make you an offer. Let's say that your business is generating about $500,000 US annually, and you have been in operation, let's say, for the last 2 or 3 years. And so you have built up a relationship with the market. You have built up a track record with the market, and you have some sustainable cash flow. An LBO specialist will look at your brand and say, okay, you are speaking to the demographic that we want to reach. So we don't want to go start the process from ground zero. We're going to take your database, we're going to take your history, we're going to take your track record, and we're going to make you an offer on that. So you're making $500,000 a year. They might probably say, okay, we're going to pay you $20 million US for your brand. And in most cases, that's an offer that most startup entrepreneur can't resist, because $20 million US is money in the bank. All right. And you can take that money, you can leverage that money, you can flip that money in so many different ways in terms of cash flow in it. And that's one thing that you can do. But if you trust your brand, love your brand, like your brand, and you believe in your brand, and you know that it has greater value than that, perhaps you can hold. Sometimes that's a risk that many businesses don't want to start, don't want to take. So that's how an LBO works. And the LBO also works in another way, where you find your growth investors, your growth capitalists, your venture capitalists invest in your operation. And with their investment in your operation, they're able to attain 51% shares in your operation. Now, 51% share in your operation means that they have majority shareholdership. And in many cases, if your management and leadership skills, if the business is not up to desired expectations, you can have an hostile takeover or a hostile LBO. These things do happen. We've seen these things happen in the world. So again, as you get into the venture capitalist market, it's very important for you to work with a PFA, a professional financial advisor, a personal financial advisor that can really help you to make informed and educated decisions as to how to structure your contractual agreements, your MOU, when you're making a pitch going to these markets to access capital. The last thing you want to do is to lose control over your business, your idea, your brand. You never want to give 50% up. You may probably give 49%, you may probably give 48%, but 50, 51% is something that you don't necessarily want to do unless you really understand what you're doing. So these are things that we believe that business startup needs to spend some time to really understand, get some skin in the game in terms of understanding these different types of funding sources and how to leverage them. Now, let me talk a little bit now about how to prepare yourself to make a pitch in this market. At Venture Capital Fund Venture Capital Inc., we talk a lot with our team leaders, investors, in terms of the right type of pre-qualifications that we should look for, one should look for when you are seriously considering to invest much needed capital with small businesses, with business startup. And some of those pre-qualifications that we were looking at, we often talk about, is something that we call team dynamics. When you are making a pitch, there is hardly ever likely that you are the only person that is going to be responsible for starting and scaling and integrating your business, your idea, your brand across region, across border, to integrate that brand with local, regional, and international relevance. It's hardly likely that it's going to be you alone. Perhaps if you are a plastic surgeon, yes, but you might be the subject matter expert performing the job, but you are not going to be the person doing human resource management. You are not going to be the person doing public relations. You're not going to be the person doing marketing. You're not going to be the person who's going to be your cultural anthropologist, and you're not going to be the person doing your finance. If so, there's major issue. Doesn't matter how skilled you are, and the last thing that you want to be in building a business and building a brand is to be the jack of all trades. You want to be a subject matter specialist. You want to be a subject matter master. And you have a team of persons who are passionate like you in relation to your business, your brand, your idea. So we talk a lot about the team dynamics. You need to have the persons who are the innovators, who are the think tankers, who are the global thinkers, the social actors, and the transformational leaders throughout the entire organization. So those who are doing marketing, they need to be the right fit for your business. Those who are doing public relations, they need to be the right fit. And things that we look for is that there must be a perfect harmony, symbiotic relationship among the team dynamics. And there are ways in which you can form stronger team dynamics. This is not just about the selection, recruitment, placement, training. It goes a little deeper than that. And when you come into our masterclass, we will walk you through this entire process so you can really prepare yourself to make the strongest pitch to the potential investors. These are important information that you need to know. So one of the first things that I want you to start working on is your team dynamics. You need to have a strong team. From my experience across the world, I have never seen a successful business, a successful brand, a successful idea that grow with global relevance on the backs or on the shoulder of one individual. That one individual may have started the process, but for it to scale, you need the right team dynamics. I can't emphasize this enough. The next subject matter that we would talk about a whole lot is something that we call market intelligence. And you would have heard me saying that market intelligence is equally as important as financial intelligence. So, you know, the very next thing that we'll be talking about. What exactly does financial market intelligence means? Market intelligence means that whoever's responsible for marketing your brand, your business, your idea, it must be the right fit. He or she or they must be the right fit, meaning that they're taking the time to understand your target market. They're taking the time to understand your target market needs and wants and expectations. They're taking the time to understand your target market lifestyle, culture, and social classes, groups, and reference groups. They really take the time to ensure that they understand your target market. And in understanding your target market, believe me, it is the only way of truly ensuring that your business, your idea, your brand is going to have 101% relevance to that target market. But this goes beyond just having the relevance. The marketing team will be able to do the market research. And we are not just talking here about secondary market research. We're talking also about primary market research. In many cases, we see business startups are doing speculative analysis, where you just sit on your throne, you sit behind your desk, and you make speculation into how the market is operating and your chance to penetrate that market. And I'm saying to you, that's the fastest way in which you can kill your vision, to do speculative, analysis. You want to get the skin in the game. You want to do the market research, the primary market research, extract some of the secondary market research, look at historical data, but back it up with primary market intelligence. So the person that is going to be responsible for this must be the right fit. It is from the market intelligence, you will be able to understand who's your target market. You will be able to understand your market size. You will be able to understand your market geographical dispersion. And these are the kind of information that you really need to make accurate, close to accurate business forecasts, financial forecasts, expenditure forecasts. So that now brings me to, we look at two things so far. We look at your team dynamics, we look at market intelligence. And you need to have this. I can't emphasize this enough when you're making a pitch. Any investor who is going to be investing in you want to know that you understand, you've got some skin in the game and you understand these elements of doing business. The last thing that we're going to look at today is what we call financial intelligence. And what I'm saying here is that you need to know your financials. You need to understand your business financials. Again, you can't understand your business financial by doing speculative analysis. From the research that we are doing, we see that many business startups, you sit in your desk, behind your desk, with as the intellectual author, and you do your financial projection, you do your business plan, and in your business plan, you say that the business has the potential to generate $1 million US in the first year, and every other year after it can generate $1.5 million and continue to increase by $1 million by every year after. But guess what? That is speculative. That kind of information is not driven, it's not informed by either secondary analysis or primary analysis. You're doing speculative analysis, which is not very good for business. And a seasoned investor who is going to be asking you pointed questions in relation to your market will be able to quickly assess whether you know your market or not. Now, everything that I've said just now, understanding your market size, your market density, your market dispersion, understanding your target market, these might sound disjointed issues, but it's only by going through this process you can come to that point where you truly can clearly develop your financial. It is by identifying your target market. It is by identifying your market size, you are able to do an accurate forecast of the potential of this market for cash flow. Now, along with this, in doing your financials, a realistic one that is grounded in research, you also need to understand market forces and market dynamics. And what do I mean by this? The element of competition can seriously affect your financial, because if you're going into a market, a hostile market, where competition is fierce, you know, the players in the market leave no stone unturned to, you know, take ownership and control of their potential users and users. They dominate in the marketplace. Now, these are all factors that you need to understand. It's not that you can't beat them. When you come into our program, we show you how you can position your business, your brand, your ID to stand up against ruthless market competition. All right. Things that people will do, and I talked about this in my last program, this is a slight deviation. You can go to war on price. You can go to war on quality. You can go to war on strategic positioning. You can go to war on a number of different things. But we have seen how serious this market can be when it comes to competition. And there's always a way in how you can apply innovative, creative marketing techniques to ensure that you can claim a critical part of the market and position your business, your brand, your ideas for success. I'm not going to say it's going to be easy, but you need to know it when you're making a pitch. You need to know who are your between 3 to 5 strongest competitors. You need to apply your SWOT analysis to this. You need to apply the PES analysis to this. You need to apply these systems to the market realities when you're going to be coming up with your figures, because you want to come up with a close to a realistic financial projection. You want to be able to do this. From the projection, you can deduct operational and administrative cost. You can arrive at what you call your NOI or your profits, and by extension, you look at your return on investment, your ROI. An investor who's going to be investing with you wants to see this, because this is going to be telling him or her, is going to be telling that accredited investor, is going to be telling that venture capitalist how they're going to regain the investment that they're putting into your company. Now remember, a number of these venture capitalist funds, the way they operate is not vastly different to how the commercial bank operates in some sense. And let me explain what I'm saying here. The commercial banks lend you the depositor's money, all right, knowingly or unknowingly. In the case of the venture capital fund, the venture capitalists may have their own funds to do investment, but in the absence of they having their own funds, they are legally licensed to go to the market and raise capital and put those capital into your hands for you to invest. Now, that's a risk on their part, all right? That's a risk on all stakeholders' part. But one of the things that they're going to be, you know, seriously about is to ensure that when they take the public money, their accredited investors' money to invest with you, that you fully understand, you know, what you're doing. You've got enough skin in the game to take full responsibility for the monies that they're going to be giving to you. This again is one of the reasons why you're going to find that the venture capitalists, in allocating monies to you, they may ask you for a position on the board, a seat on your board of directors. They may ask you for a share in the operation, and they may also take some degree of management responsibility over your operation. They may negotiate to have these kind of influence in your operation. Now, let me tell you, they got some advantages here and disadvantages because the right venture capitalists come in to work for you. If you are successful to get the right venture capitalist to invest with you, the right venture capitalist is not only going to give you capital, they're going to work with you to help you to get access to bigger markets, regional markets, and international markets that will significantly position you to scale your business, your idea, and your brand. So this definitely is an advantage. But what you have to do is to constantly weigh the advantages against disadvantages. All right? Because alone, you're going to be probably growing at slow pace. With a venture capitalist that you're on your side, you're going to probably grow 5, 10, 20 times faster than if you're doing this by yourself. So you need to weigh this. So the faster growth pace may justify one of the reasons why you might be willing to give away 30, 40, 45% share or equity in your estate. So these are things that a PFA, professional financial advisor, your personal financial advisor, will be able to advise you on. And this is what we do at Venture Capital Fund, Venture Capital Inc., Global Branding and Marketing. We really try to get you to the heart of these things so you can make an informed and educated decision as to how you can get unstuck with your business ideas, your brand, and so forth, so you can really start to leapfrog your business development. All right. So again, I trust that you would have enjoyed today's program. Today, content, we look specifically at team dynamics. We look at market intelligence, and we also look at financial intelligence and understanding your financial when you are trying to position your business, your brand, your idea to source capital from the investment financial sector. And I clearly said early on that the difference between the commercial bank and the investment financial sector is that when you take money from the commercial bank, you have a monthly obligation to pay interest plus principal. You borrow the principal balance and you have to pay interest on the principal balance for the life cycle of that debt. The flip side of that, when you go to the venture capitalist market, if you're successful in this regards, you pay dividends. And in most cases, in almost all of those cases, you pay the dividends on a yearly basis. Of course, there are some unique portfolios where there are smart investors and their smart investment portfolio. We wouldn't talk about that today, where you can draw down dividends payout on a quarterly basis. We will not get into that today. However, I trust that you really enjoyed today's program. We're looking at business startup solutions, business startup solutions. And today we look at the investment capital market. Tomorrow's program is going to be very exciting because we're going to be looking at smart capital markets, and that's a difference between commercial investment financing, investment financial sector, and smart capital market. One, you pay interest on your principal, the other you pay dividends. And smart capital market, if you leverage it smart and well enough, you may have to pay zero on the capital that you're going to begin. And so we'll look at some of those things tomorrow. So I want to encourage you to join us. Again, I want to encourage you to give us a like, give us a thumbs up in the event that you find this information interesting, and you will be the first to get this information as we publish them on a daily basis. Now, permit me again to just talk a little bit about the vision behind this program. Venture Capital is Venture Capital Fund, Venture Capital Inc., and Global Branding and Marketing. Our mission is to position our clients, employees, and strategic partners to understand, create, and leverage passive income cash flow, build multiple streams of income, leverage smart investment strategies in order to build generational and intergenerational wealth. In our program, this program, Venture Capital Fund, you will learn about the commercial financial sector. You will learn more about financial intelligence in the investment financial sector, financial intelligence and smart capital market, and financial intelligence for a sustainable livelihood. You will also learn that financial intelligence goes beyond your ability to make money and maximize your disposable income, because it addresses the issue of understanding the global financial system and your ability to leverage this intelligence to create good debt cash flow, minimize existing debt financial portfolios while maximizing financial and equity capital gain. The understanding of the commercial financial sector, the investment financial sector, and smart capital market are an important body of knowledge for you to have in the global landscape of financial intelligence. Again, my name is Gary Thompson. I'm a business development consultant by profession. I'm a humanitarian by nature, and I'm the multiple best-selling author for several books, including Billionaire Codes, Manager's Toolkit, and Billionaire Codes. These two books are already bestsellers. So I want to encourage you to log on to my sister company, our sister company, which is www.megamoneygy.com. Navigate front page, navigate shopping to learn more about what we do. It has been such a pleasure being with you today, and I look forward to being with you tomorrow. And remember, we have a team of subject matter experts. We have a team of PFA, professional financial advisor, personal financial advisor. We have a team of economists. We have a team of accountants. We have a team of business consultants with a combined knowledge of over 75 years in the financial and business world. And we want to put this body of knowledge to work for you in the interest of helping you to scale your business, your idea, your brand with local, regional, and international relevance. So I want to encourage you to reach out to us right now for a free consultation on your business and what we can do to help you to take your business, your idea, your brand to another level. We're looking forward to seeing you. So do have a blessed and wonderful day. Protect yourself from COVID-19, and we see you on the other side. So be blessed. We see you on the other side.